You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Coffee with Cott, where advisors can find out what is brewing in the options space with your host, OIC's Director of Education, Eric Cott. OCC was created in 1973, and OIC is an industry resource supported by OCC to provide trustworthy education about the benefits and risks of exchange-listed options. Since 1992, OIC has been dedicated to increasing the awareness, knowledge, and responsible use of options by individual investors, financial advisors, and institutional managers. Before we get started with this show, investors should know that options involve risk and are not suitable for all investors. You should never enter into an options transaction until you have read and understood the risk disclosure document, Characteristics and Risks of Standardized Options. This brochure is available by visiting www.optionseducation.org or by calling 1-888-OPTIONS. OIC makes no recommendation with respect to any financial firm. OIC does not make any warranty as to the accuracy, usefulness, timeliness, or the continued availability or existence of information created or maintained by others. Opinions and strategies expressed by others are not necessarily those of OIC, nor does OIC endorse, warrant, or guarantee products, services, or information described or offered by such firms. Commissions, fees, margin interest, and taxes have not been included in any of the examples used in this show. These costs impact the outcome of all stock and options transactions. Consult your tax advisor about any potential consequences. None of the information presented in this show should be construed as recommendation to buy or sell a security or to provide investment advice.
Welcome, everyone. I am your barista for this program. So glad you can join us. Please go ahead and fill up your cups with a hot beverage of your choice. Whether you're cold brew, double espresso, mocha cappuccino grande type, we have you covered. On this show, we pour over topics that relate to your practice, your clients, and options. Welcome, my coffee compadres, to the OIC's CWC podcast. I am Eric Cott, your head barista, and today I might have you all think about ordering your hot beverage of choice via a digital platform. The reason is that we have a cool topic and a couple of friends/colleagues who are wired the best to get into this discussion. The menu for this show is Fintech and options, and I am literally jumping out of my seat because I just successfully performed a groundbreaking experience this weekend when I transferred money to my daughter Talia through an electronic technology app. Full disclosure, my girlfriend Kim didn't believe I knew how to do that, but more on that momentous skill later in the show. Let me introduce my guest, starting with Marc Chaikin, founder, Chaikin Analytics from the City of Brotherly Love, and then have Tony Zhang, chief strategist at OptionsPlay from the city that never sleeps, just like Tony. Marc, please let our audience know about you, the firm, some of the derivatives directions you took in your career to get to CA. I'm not referring to California, but your firm. Marc?
Eric, good to be with you. I've had a career that has spanned 50 years, starting out on Wall Street with a very fundamentally oriented research firm. My first exposure to options were the over-the-counter options that were sold by one or two firms who came into your training program and basically taught you about options. But very quickly in my trading career and career as a broker, I started using technical analysis. So when I took over the options department at a regional firm called Tucker Anthony and R.L. Day, which is now part of the RBC network, I looked at the performance of the options traders. We had about 225 brokers, tens of thousands of options traders, and most of them were losing money. And the reason was they didn't understand the importance of what I call the directional edge. So what I started doing was looking at not just implied volatility, but also technical analysis as a way to help guide options traders. And that resulted in a much more profitable group of traders. The people who embraced it performed a lot better and more consistently. And that's been a constant throughout my career. So rather than going through the long and winding road, I'll just point out that over the last 10 years, we've enhanced the focus on technical analysis with a multi-factor quantitative model, which has gotten a lot of traction in the marketplace. That's a long-winded way of saying that we've distilled the fundamentals in the U.S. equity markets down to what we call the Chaikin power gauge rating, and that's now our directional edge for options traders. We have a platform called Chaikin Analytics for both individual options traders and advisors who use options. We've integrated OptionsPlay, which Tony Zhang is going to talk about, into the platform. But if I had to sum up what we do to make options traders smarter and more profitable, it's to combine fundamentals with technicals to give traders a directional edge.
That's a great summary, Marc, and we're going to delve into this a little bit more. Tony, how about you? Background, how you landed in the options auditorium with OP. Not saying overpowering, Tony, but your firm OP. So some background for our listeners.
Well, thank you for having me, first of all. Great to be here. My name is Tony Zhang. I'm the chief strategist here at OptionsPlay. And I actually started my career at a company called Forex.com. Those of you that trade FX currencies, trading as a market strategist, helping both institutional and retail traders better understand, color of currencies, futures, and derivatives in currency options. And that's really how I started my career in analyzing the markets using technical analysis. And when the ISE launched FX options, I was tasked with building out the education and the platform for trading those FX options at Gain Capital. And that's really how I actually got started in currencies and options. And for those of you that remember someone by the name of Steve Meisinger, he was actually the person who taught me how to trade options.
Wow.
So I learned a lot from Steve, and after currency options, started trading futures, started trading equity options, and had the opportunity to start OptionsPlay about 7 years ago when we looked at the trading platforms that were out there, just not quite providing the functionality that we were looking for to make options trading easier to analyze. We found ourselves I was the type of trader that needed 4 different monitors on my desktop to trade options. And that's really how the genesis of OptionsPlay got started. We wanted to build an options trading platform that was more intuitive, that someone who didn't have an active trading background or a professional trading background can go in and start analyzing option strategies. And that's really how OptionsPlay got started. And we've been able to integrate our platform into firms like Chaikin Analytics to help provide a seamless integration between the technical analysis and the fundamental analysis that Marc and his team creates, and leveraging that directional view into powerful option strategies and income generating strategies. So that's how we got to where we are here today.
We're going to talk a little bit later about the kumbaya between CA and OP. We'll touch on that. I promise my listeners. A good place to start is the term Fintech, short for financial technology. Whether you're purchasing coffee at your local coffee shop or managing your finances, Tony, Marc, we know that Fintech is all around us in 2019. A bit of context for the listeners. Fintech has combined cutting-edge technology developments with financial services applications. And not just in the retail area, you both touched a little bit on this, but the advisory industry and option space, not only, say, algorithms offering financial services in a completely new way, but this has sort of morphed into a new software landscape. Now, fintech is not entirely new. It's been around for 60 plus years, taking us back. A lot of my listeners know I'm a history major, so I'm taking us back the 1950s, bought us credit cards, easing that burden of carrying cash. We could go to in the 60s, ATMs replaced physical tellers and branches. Timely for us and the CWC podcast, because in the 70s, electronic stock trading began on exchange trading floors. In the early 80s, I'm going to throw a name out there, Tony, that you and Marc know about, a pioneer. Thomas Pettifree introduced handheld devices using computer programs on the floor. Then in the 90s, we saw this e-commerce, internet flourishment of business models, and saw the introduction really of full-scale online stock brokerage websites aimed at individual investors, replacing this sort of phone-driven broker model. And anyone out there remembers, as I do, the heavy, large paper phone book and that term smile and dial. I sort of remember that. It's still in my head today. You both have firms that provide financial services through software and other technology platforms designed to connect technology for ease of use, to manage not only applications, to assist advisors and their clients with analysis. We know that options, like all derivatives, should be used in used in connection with a well-defined investment objective. When you're using option strategies, we've talked about this before on a prior podcast, it's important to have a view on the expected change in implied vol and really have a directional opinion of movement of their underlying assets. I know, Marc, your firm has been very supportive. 3 years ago at the OIC FA Forum in California, I want to thank you again and your firm. There were many seasoned advisors from around the country managing very large concentrated wealth of client assets and felt that the investment to get comfortable with option strategies was really consuming. Let's all recognize that fictitious large coffee mug in the room, options can seem intimidating. I'll start with you, Marc. How does an advisor approach this? If you could provide an example of any aha moment for an FA or RAA that connected with fintech into their practice and it changed the direction of their client's portfolio design and managing assets.
I think a couple of things are relevant here, Eric. One of them is a bigger picture view of what the advisor market looks like. In the big wirehouses, and there are about 90,000 Series 7 registered people in the wirehouses, and these are the big banks like Morgan Stanley and Merrill Lynch and UBS and so forth. There's more of a company-wide approach to managing assets. What we've found is that the advisors who have embraced options tend to be in the firms that are not as cookie-cutter controlled. So it's the RBCs, the Raymond James, the LPLs of the world, where we find the options-oriented advisors because they have more freedom. And these firms are wooing advisors from the big firms. And part of the reason is this freedom to customize strategies and portfolios to meet client-specific needs. So drilling down into the here and now, we're in a zero interest rate environment around the world. Negative interest rates prevail on over $17 trillion of debt. The individual investor who has assets managed by advisors is very often looking for income. And options writing is a wonderful way to generate income. It's a proven strategy, but it requires technology. You can't do it seat of the pants. If you're an advisor and you've got 100 to 300 accounts, they all have different goals. You've got to customize strategies. You have to be on top of the opportunities as they present themselves. You referred to changes in volatility. Obviously, implied volatility affects option premiums and the ability to generate reasonable returns by writing options. Duration is a big factor. You're writing options that are expiring in 7 days. That didn't exist when you and I started, Eric. 14
True.
days, 45 days. So there are so many variables and so much information to manage that it really is important that advisors have technology, and it can't really be freestanding technology. Advisors are almost completely sold on the concept of integration. So whether it's Chaikin Analytics or OptionsPlay or any other service, Riskalyze is another one that comes to mind, an options-oriented advisor needs technology that becomes part of his daily workflow, where he knows what information is available, and it's available when he needs it, and it tends to be global in terms of all of his accounts. So when you add all this up, it means, A, you need a defined strategy. So if an income-oriented customer has tax issues, you've got to take that into account when you're writing options. You need technology that alerts you to potential events like earnings that could impact an option writing strategy. And what we've found is that the more integrated your intellectual property is, whether it's stock, ETF, or options oriented, the more likely the advisor is to embrace it and actually use it as a way to grow his client base. At the end of the day, there are two things that an advisor is interested in. It's customer acquisition and customer retention. Customer retention means differentiating yourself. So the advisors who are using options, I think, are differentiating themselves from the pack, but they need that game plan that's predefined and that incorporates a suite of technology tools that's integrated into the daily workflow. And I think that we've seen that evolve over the last 20 years. We had back in the old days things like the Schwarzatron, there's a name from the past, developed out of Chicago, which was the be-all and end-all for the floor traders doing options. And I think Tony Zhang and OptionsPlay are really in the forefront of providing probability-based tools that the advisor can rely on but also use in the customer acquisition process. So I think for a suite of technology tools to work for the advisor, A, they have to be integrated, B, they have to be easy to use, and C, if they're positioned properly, they can help in the customer acquisition process.
That's perfect. Tony, your interaction, Marc talked a little bit about this, asking you your interaction in the advisor space. And you and I have conducted many live panels and sessions where both of us have seen that aha moment on the advisor's face, because you're also conveying actual situations of fellow advisors gaining a slight advantage by incorporating fintech and options into their client meetings and discussions. Can you elaborate a little bit more?
Yeah, absolutely. I actually have I want to take one step back, and especially when you talk about aha moments, I want to take a step back for advisors who are thinking about options. And, we're in a landscape now where most option chains are a few hundred, if not a few thousand strikes, and you have up to 1 million option series that are listed these days. It's very difficult to look at a screen and as an advisor, not only managing one account, but hundreds of accounts, to be able to manage all of those and understand how to manage those positions. But I think one of the things that's very counterintuitive about options trading is the fact that in trading we learn from a very early age to buy low, sell high. So naturally, when you're looking at an option, if you're trying to buy an option, we see a lot of users will try to buy the options that are cheap, many times short-dated options that are out of the money. And when they're selling options, they like to sell options that are expensive, and they sell long-dated options many times at the money. But in reality, it's actually quite the opposite. You want to take a very counterintuitive approach, because when you're selling options, you want to sell those out-of-the-money short-dated options, and when you're buying them, you want to buy those long-dated in-the-money options that are more expensive. And that's very counterintuitive, and it's very difficult to look at an option chain and be able to make those decisions. And that's why here at OptionsPlay, we take a very data-driven approach to the strategies, the expirations, and strike prices that we teach. So not only do we test these strategies and backtest them and show you why you should utilize kind of a counterintuitive approach to options, we actually help you implement it using OptionsPlay. So, as Marc said or touched on this, advisors manage hundreds of accounts. It's impossible to do it one by one. So it really requires automation for advisors to be able to really utilize options in their practice. And that's where, as Marc said, there are a variety of firms that are now out there that help advisors look at a portfolio, tools like Chaikin Analytics and OptionsPlay that provide analytics on those on which options to trade, and then post-trade. And this is really where some of the investment needs to be made on the advisories firm, because we see many advisors have just an option chain and very basic portfolio tools with respect to options. So we really see that there needs to be an investment in technology, not only from firms like us, but also from the advisory firms to support these advisors to be able to manage a large number of options or a large book of options at their current firm.
Tony, I'm going to stay with you on this topic, but navigate a little bit into another question that, no pun intended, I'm going to overlay with the aha expression, but aha moment. So your firm and others in the space, Marc talked about some others, Tony, you referenced them. You all had a belief, or you believed you had a deep understanding of this process and problems which needed to be fixed. It was an opportunity to implement certain ideas, create solutions. However, was there resistance and pushback in the beginning? I ask that. I recall my days as a former advisor, as an FA. You had the advent where ETFs were really proliferant, or kind of were an alternative to mutual funds. My prior guest on the CWC podcast, I had Dave Nottig and Eric Balchunas. We recalled the difficulty in exchange-traded funds, even the lack of overlay strategies with ETFs today being a sufficient barrier to growth. Tony, what about the fintech world with option solutions and advisory embracing it? What do you feel was preventing the integration and their acceptance by large BD firms, their advisors, and even smaller firms?
I think the example that you gave of pushback of ETFs in the world of mutual funds is similar to the uphill battle that we sometimes have with options, being that options competes with many other asset classes. So I don't necessarily know that it's that advisors don't want to use options. It's that there are many other competing products that are out there. And if you look at sometimes the major wirehouses, you might see that other products might pay higher commissions. And I think one of the largest barriers to utilizing options is really the ability to manage those positions once you enter them. And I noticed that a lot of firms do not provide advisors with a lot of tools to help them manage positions. So, when we look at the advisory space, predominantly it's income generating strategies with respect to options, selling cover calls, selling cash secured puts. These types of strategies, even though do not require active management on a day-to-day basis, do require time and commitment to make sure that those positions are still valid, that they don't require rolling or an expiration coming up, because that does create a taxable event if the stock gets called away. And sometimes you have to look out for dividends because you can have an early exercise. And these are all things that advisors may not have the time to look at every single day to stay on top of their option positions. And that is actually one of the biggest reasons that we hear from advisors that say, I like options, I know the benefit of options, but I simply don't have the time or the expertise to manage it. And that's really where you have a blend of technology companies that provide solutions for this, but now you also have, an increasing number of sub-advisors that are providing advisors who don't want to necessarily do the work themselves to basically farm out that work to a specialist. So there are a lot of different solutions that I think advisors can tap beyond just the technology play to utilize options in their practice and for their clients.
It's a great observation, Tony. Marc, I will ask you the same question. You ran an option desk. You touched on that many years ago. It wasn't a majority of the advisors' practice to lead with option strategies. I'm referring to my experience when I was with a big BD. I recall being a tax-exempt guy. I was in the city of brotherly love. My clients, well, I guess leading with tax-exempts, I have to thank my dad and my two brothers because I grew up around municipal securities and felt comfortable explaining it, felt it was at the time a good solution. Marc, explain your experiences. Why the resistance in the beginning with Fintech?
Well, I don't know that there's a resistance with Fintech, although as the advisor population gets younger, there is clearly an embracing of mobile Fintech, you name it, in terms of just technology being a productivity enhancement tool. I think that the resistance is universal. It's human nature. It's resistance to change.
Sure.
So I'll give you an example. For an advisor to get into the use of options to generate income, which is the primary source, that's not speculation, he has to be stock-centric, although you could write options on ETFs. I see a lot less of that going on, maybe in the industry group and sector ETFs where there's a lot of liquidity. You see some of that, or using the index-based ETFs like SPY, QQQ, or IWM. Mm-hmm. But for an advisor to get into the business of using options across a broad spectrum of client accounts, education is the key. And I am not trying to throw you a softball, but OIC, this was unplanned. OIC is clearly in the forefront of options education. If you can't educate the advisor, he can't educate his client. So what we say in the sort of ETF world, because we have a couple of ETFs where our rules-based indices with NASDAQ are driving the conversation, is that if you can't explain it to the client, to the broker in 30 seconds, he can't explain it to the client. I'm going to go on mute.
So, Tony, I'm going to ask you this question, sort of rhetorically. It goes along the same lines as Marc throwing me the softball, and we always like the endorsements whenever they come in. It is like you wanting a cardboard sleeve around your cup of coffee if the beverage is extremely hot in temperature. Do you feel, Tony, education is an important first step and building block as part of your software tools with options for the advisor community?
I will be honest, I don't think we'd be here today without the educational piece of OptionsPlay and the OIC and everyone in this industry that spends the time to educate on options, because at the end of the day, options is a complex strategy. It's an asset class. It's not something you can read one book or attend a webinar and start trading options. It's really a nurturing process through, usually for most individuals, anywhere from 3 to 6 months of going through different courses, different forms of education. Everyone learns slightly differently, but it still usually takes most people a few months to get to the point where they're comfortable enough to start trading their first option. And this is something that we invest heavily in not only the education, but making sure that users are walking through the education in the right order, because you can't just learn about one thing before the other. You have to take baby steps with what a call is, what a put is, and then work your way through it. And this is something that I think the OIC does very well, is creating a syllabus and walking that client through that journey to make sure that they learn all the steps they need before they start trading their first option. And what we do here at OptionsPlay is we try to take a very practical approach to education. We always make sure that we always ensure that when we're teaching users a concept with a strategy, we also show them how to use our technology to actually implement it, because there tends to be sometimes a gap between the education and the implementation. Because if you're looking at us at a symbol on a PowerPoint, sometimes when you log into your trading platform, it looks completely different. So we really try to bridge that gap between the educational piece and the implementation that many users sometimes struggle with.
Marc, Mike Kitsis, someone well known in the advisor space who I owe a lot to for encouraging me to pursue this digital outreach with blogs and podcasts, publishes a financial advisor Fintech solutions map and breaks out categories such as risk tolerance, investment data / analytics, which I believe, Marc, your firm has highlighted. We're on the road. We frequently use the analogy of option strategies, refer to a toolbox. Folks understand the equity and fixed income components are analogous to a Phillips head screwdriver and the hammer, but the tools that have fallen below the tray are at times these overlay strategies that can enhance or minimize risk to a portfolio. You, Marc, have a sense about the DIY. Your book is a good transition here, since advisors tend to be either a do-it-yourselfer. I tend to talk a lot about the do-it-yourselfer, the general contractor. Both you gentlemen refer to that in terms of how advisors integrate options. We also know that power tools, another reference, Marc, to your book, power tools can benefit a person when working on a project. How does fintech and these investment decision-making enhanced tools make advisors better equipped?
Basically by cutting through the information overload problem and giving them the confidence that they've got the support they need to back up the strategy. Just to finish the thought on the previous idea, if you can't explain a strategy to an advisor in 30 seconds, then he can't explain it to a client. And then he's not going to be comfortable implementing a strategy. Clients are not looking for black boxes. Advisors are not looking for black boxes. So I think the real challenge in embracing fintech, and we've already established that this covers a wide gamut of electronic and social tools in the financial services and advisor space. The challenge in implementing it is, again, to find tools that integrate with their existing platform and then become part of their daily workflow. I think that's the critical element. It's what made our previous brokerage firm, institutional brokerage firm, successful, which we sold to Instinet, which was the original liquidity pool that really triggered the explosion in electronic trading and price discovery in stocks, and now obviously that's taking place in options. The whole key to our success was becoming part of the client's workflow. And back then, we were dealing with the buy-side institutions and trading desks, the people like Fidelity and T. Rowe Price and Invesco and so forth. So I think integration and ease of use are really critical. You can have the best tools in the world, and if they're not easy to use or understand, they're just not going to cut it. You and I know about technology that analyzes options activity during the day to find unusual options activity. Some of the highest profile people in our business use these tools to generate potential ideas. There's no way an advisor can utilize that technology. They're too busy. It can't become part of their daily workflow. They'd be glued to the screen. So what an advisor needs is someone who distills down information into usable data. And that's what Tony Zhang and OptionsPlay do particularly well, cutting through the Greeks and the need to parse through options tables and distilling it down on a probability basis to data that an advisor can depend on, more importantly, that he understands. So, for instance, I'll give Tony a plug here. In the default mode, if you're an option writer in OptionsPlay, whether it's on the Chaikin platform, the Dorsey Wright platform, or standalone, or Raymond James, where they're integrated, there's a default set of assumptions that OptionsPlay has back-tested, and they know that these yield the best results over time. Nothing works all the time, but some things work over time, which means you got to implement the same strategy day in and day out, week in and week out. Now, it's important that an advisor be able to modify those. So when I use OptionsPlay and try and find option writing ideas for webinars that we give to advisors, the default option writing strategy typically involves an option with a shorter time duration than I'm comfortable with to use in my webinars as an explanation. What OptionsPlay enables me to do is to immediately change that assumption on the fly and come up with a strategy that I'm comfortable talking about, more comfortable talking about with advisors. They both work. One involves writing options with shorter expiration date and repeating that process many, many times during the course of the year. I have a particular strategy that I like to articulate where a client has bought a stock, has a profit, writes an out-of-the-money call. I can find those strategies so easily using OptionsPlay. I'm sure there are other providers of information like that. We've never come across them, so they're not obvious to me. But that's an example of some of the challenges and some of the solutions that meet those challenges in the options and fintech area.
That's well said, Marc. Tony, at OIC, we frequently hear on the road, and this is a selfless plug for the OptionsEducation.org website and the Cerulli quantitative research study, that managing positions is so time-consuming. Marc talked about that, and you did earlier in the podcast. Typically, advisors, I was just in Minnesota last week, have said, do I need to be a computer whiz? A quant, I'm being facetious, a quant from MIT. But a lot of advisors have to create these elaborate Excel spreadsheets for managing positions across multiple accounts. RIAs potentially are using TAMPs. Some broker-dealers offer systems for multiple account implementation for these advisors. However, what other innovations, Tony, need to be brought to the derivatives industry and listed option space? I don't believe you're going to say that advisors are going to need an in-depth expertise in artificial intelligence to be able to benefit. And I'll start with you, Tony, and then maybe Marc can share his thoughts.
Sure, yeah. So as you said, managing positions is one of the biggest headaches for advisors. And, managing positions, unfortunately, is something that relies very heavily on the brokerage or the custodian. So there have been technologies that have come up over the last few years that allow custodians to analyze or advisors to analyze their positions outside of their platforms. And I think that's really where I think we need to potentially invest some technology into is being able to pull positions from an advisor's positions and be able to analyze it externally. Because at the end of the day, it's hard to expect every single RIA firm to build that stuff in-house. I think part of the problem is the fragmentation that we see, across thousands of firms. How do we get all of them on the same platform? And this is really where I think we need to go external. And this is some of the work that OptionsPlay is working on, is being able to pull in advisors' positions regardless of where they custody their assets and provide them with real-time alerts on when it's time to manage a cover call, when it's time to roll a cover call, when there's a dividend assignment risk that's coming up. So there are a lot of potential solutions there, but also, as you said, there are sub-advisors now that are specializing in overlay strategies that allow an advisor to effectively, have someone else do that work, someone who has the time, whose job is dedicated to just managing positions. And I do think that for some advisors, that is an alternative solution for them. But, to Marc's point, before you can get any options, you can get their clients to trade options, they need to be able to explain options to their clients. And to that point, I think that's something that, is on the educator side, right? That's on OptionsPlay, that's on the OIC. One of the things that we do now with respect to options is we don't talk about cover calls as an options trading strategy. We talk about the benefits of cover calls, the ability to strategically exit your trades as they rally. We talk about cash secured puts as a way to enter your stock positions potentially at a discount. We talk about options in these ways that allow them to convey the strategy or the benefits to their clients. And that's kind of where we see a lot of the aha moments lately, is taking a look at options but explaining it in a different way, where people start to understand, it's not just about generating income. I'm really thinking about this to compare this to placing a limit order to exit my stocks, or placing a limit order to buy my stocks, but I'm able to generate yield while I do that. And that's some of that aha moments that I think we really need to push in order to grow this industry.
Well versed. Marc, you know that I reside in the Sunshine State, and I did hear that they are beta testing this technology with a massive retailer whose name begins with W to deliver food. I don't know if they're doing this in the Philly area, but they're going to deliver foods to homes in Vero Beach because people are too busy. Now, I have a cousin who's an orthopedic surgeon in the area, therefore I get the concept. Someone enters your home, they fill your pantry, refrigerator. Now, our listeners understand complexity of the Greeks and options with implied vol, etc. So, Marc, is there a virtual platform in maybe the not-so-distant future, I'm going to take Tony's thoughts there, but that will exclusively guide your trading or implement this without any in-depth work, in essence, a self-driving car analogy? And I'll have Tony add some color to that after, but I'll start with you, Marc.
I don't think so. I think
good.
Why agree? If three of us are agreeing, then at least one of us is superfluous. That's what they always said about, if you're in a meeting and three people agree with one another, then one person shouldn't be in the meeting. So whether you're talking about robo-advisor capabilities that some of the successful firms like Betterment or Wealthfront have rolled out, and now Vanguard and Schwab have really swamped them because they had the asset pool to begin with. So the marketing cost of getting them in there, whether it's an advisory are not high, whether it's a robo-advisor or some way to find alternatives to ETFs that are broad-based, like SPY, QQQ, and IWM, so an advisor can differentiate himself, or whether it's option strategies. I just don't think these things hold up over time. I have a certain view of robos. They've grown up since the bull market began in 2009. As a broker, you'll appreciate this. If you've lived through a bear market, and we haven't had one for 10 years, you understand how important the advisor hand-holding process is and the education process that preceded it. So I'm not a big fan of automated solutions. I think you have to draw the line at information, whether it's in equities, ETFs, or options, that integrates well into the daily workflow, but stop short of pretending to be the self-driving car, you'll never see me in a self-driving car. I'm sorry.
Well,
I grew up in Brooklyn and drove in New York City for years, and you got to be a madman. Even now with Amazon delivery, they're stealing things off the doorstep in Philadelphia if you're not home, and Amazon just leaves it. So, there are unintended consequences to everything. I am not a believer that there will ever be a unified, global, automated solution.
Tony, I'll then transition the question along with this, because Marc mentioned robo. We also know that was not even a familiar term a decade ago around the time of the financial crisis. Asked Marc about this self-guiding implementation. I'll also add a part 2 to that question for you, Tony. What do you see in the next 5 to 10 to 15 years with Fintech, maybe as it relates to advisory in the option space?
So great. I love this type of discussion. I think I will take a counter to what you two said, and I believe that
we're the old guys, Tony. That's why. Marc,
and I genuinely believe it comes down to a generational thing. With respect to, I grew up in a generation where we don't want to talk to someone. We don't want to have to pick up the phone. We want to be able to text. We want to be able to just do it on our phone. It's amazing what we can do on our phone now. And I have a savings account that there's no phone number to call anymore. It's just the robot that I can talk to, but I get everything from that robot. So I think it is a generational thing, and I think as you have this massive transfer of wealth from baby boomers to millennials, that is really where you are going to start seeing that shift towards robo and digital advisors. And I do, to Marc's point, I do believe there will be unintended consequences. I think there will be growing pains in that process, but I think the shift towards that is going to happen. May not look exactly the way Wealthfront and Betterment look today. I'm sure there will be adaptations to it, whether you have more of a hybrid model like what Bank of America runs today, whatever that looks like. I think that there's no stopping that change in tide. And to your question, as far as what I see, going forward, I really think automation and digital advisory will take off. And as we get more advances in machine learning and AI, we're going to need more alternative data sets, because I think one of the limitations of the models that we have today is all the different models are looking at the same data sets, and that limits the efficiencies and the efficacy of some of these models. So there have been a lot of alternative data set providers that have creeped up over the last few years that didn't exist even 5 years ago. NASDAQ and the exchanges are adapting from this perspective, and also just business models. The 1% model in financial advisory, I think that's going to change drastically. Maybe we might change to a subscription model. It'll be like Netflix. I don't know, but those are the types of changes that I see, coming in the next 5 to 10 years, in my opinion.
Marc, did you want to weigh in on your predictions with your crystal ball, maybe 5 to 10 to 15 years out?
I want to go in a different direction here, Eric. So humor me, because I think you're going to like this.
Of course.
I started out by saying that at the major banks we see less interest and usage of options. However, there's one exception to that, and that's where some of the biggest advisors at some of the banks that do investment banking and do the deals in Silicon Valley and elsewhere use options, and I just don't think you can automate it. And that's when they are prospecting and landing big corporate big accounts at some of the investment banking clients that their firm have, like Apple and Lyft and Uber. Options become a huge tool to mitigate risk of illiquid holdings, to liquefy portfolios. You cannot automate that. That's a very personal financial planning strategy, and some of the biggest and most successful advisors at Morgan Stanley, UBS, JP Morgan, Merrill Lynch, are building their books by providing the kind of expertise that fintech millionaires are looking for. And they're young, Tony. They're millennials in many cases, but they're sitting on huge amounts of stock, or they've got options. And the very savvy brokers out in Silicon Valley, but also in New York. We have a client who's also an investor in Chaikin Analytics at UBS. He's got 5 Apple executives. Well, what is he doing with Chaikin Analytics? He's checking the fundamental and technical prospects for Apple, and then using that in his client's meeting in Silicon Valley in Cupertino to suggest options strategies, overwrite strategies, or collars, which give them a measure of downside protection as well as income for these clients. That's how they're building their book. That's how they're getting the $50 million accounts. So that's the counterpoint to my original idea that there is a trend toward independent advisors. The independent advisors don't have the banking relationships. They don't have the natural entree to these executives and higher compensation employees at the big startups. This is where wealth is being created in America, and options are playing a big role in that. But there's no way in heck you're ever going to automate that, in my view. But it is a really important implementation of options that advisors who know their stuff are using for customer acquisition and for customized financial planning.
So the two of you, even though there was a differing opinion, and I'm using the analogy, sort of the coffee, large company in Massachusetts that has double D as their initials, and then you have another large corporation publicly traded that's a big coffee provider in Seattle. We probably wouldn't see them collaborating to offer a combined deliverable, but our listeners today learn that Chaikin Analytics and OptionsPlay are doing work together in the advisor space. I would tell my listeners the fintech space can be a happy and collaborative environment where everyone gets along. That's a nice thing to hear about that. Gentlemen, on a prior CWC episode, a shameless plug for the CWC, prior episodes can be found on the OIC website or in iTunes. I had some guests talk about the value to utilize platforms to implement mock option trading, sort of to get practice before you're implementing it, either for themselves or their client base. Tony, I'll begin with you. How do you feel about this idea to monitor a strategy before committing real money? I know many firms offer this option, no pun intended. I'll start with you, Tony, and let Marc weigh in on the topic as well.
Well, I think it's absolutely necessary to have the ability to mock trade an option, especially while you're going through the education phase. But I will say, once you get past the education phase, it's more important to trade small, trade one contract, especially in this new environment of $0 commissions. You can trade very small, risk just $30, $40, $50 on a trade and get familiar with trading options. But I do think during the education phase, while you're going through a syllabus, while you're learning about calls and puts, to be able to put on a fictitious trade is absolutely critical to the educational process.
Marc?
I'm going to play devil's advocate here again. I don't think advisors have the time or the temperament to tinker with theoretical paper trading platforms. Good luck if you can get them to embrace it. If anybody can, it's Tony, Zhang, or Eric Cott. But my experience is not only are people resistant to change, which we've already talked about, but they don't have a lot of time. So if their business is good and adding options requires some monitoring of paper portfolios, I'm really skeptical that that's going to gain traction.
And an honest answer, Marc. Speaking of time, Marc and Tony, we're coming to the close. However, gentlemen, I always like to ask my guest for our listeners two things. If you were not in the educational outreach and investments world, what do you think you'd be doing instead? Part two, what is your favorite brew when you're sipping that cup of coffee? Let us begin with Marc, and I am thinking a 70 Delta. The answer might be traveling to far and exotic places or writing more books. I know you were named one of the top Wall Street experts and opinion leaders by wallstreeteconomist.org. Marc, those two questions.
Well, Eric, this is the only job I've ever known, and it's my passion, other than good California Pinot Noirs and cooking. My wife loves to travel. If you helicopter me down into Tuscany or the south of France and say you're here for 2 weeks, I'm fine. But what I would be doing is what I'm doing now. I'm deep into a machine learning project using cloud-based AI technology, which is the equivalent of multiple supercomputers from the 90s, to synthesize all the information and the inputs that we have, both technical, fundamental, and options related, to develop strategies for the future, automated strategies. In terms of, what was the second question? Oh, the brew. We found San Francisco coffee. It's a family called Rogers Brothers. I was Googling for the best decaf coffee because there was a period when I couldn't decaf. And Rogers Brothers came up, and they always have discounts for the Keurig pods. So I've zeroed in on something called their Kona blend. I've given up on decaf. And the Kona, I guess I didn't know this, but Kona coffee is the most expensive in the world from Hawaii. They have a Kona blend. It's flavorful and it's delicious and it's easy on the stomach. So that is my current favorite from San Francisco Coffee Company.
We're going to have to mark that down. I'm going to go to Tony in a second, but one of the things my listeners have heard me say on some prior podcasts is we're hoping to take the show on the road in 2020, and we might be going to some of these spots to experience these wonderful suggestions from our speakers on great Java and coffee that they enjoy and like. So please, my listeners, pay attention for next year. Now, Tony, I am thinking in 80 Delta, you would be a professor possibly at a university in Silicon Valley teaching cryptocurrency and Bitcoin. Is that a possibility?
That's a close guess. If I wasn't doing what I was doing today, I find human beings fascinating. So I think I would either be some kind of psychologist or a pilot. I love flying. I find aerospace fascinating. So one of those two, I think would be my profession. As far as what coffee I drink, now I'm not a coffee snob, but I predominantly drink all of my coffee from Australia. If anyone loves coffee, you have to go to Australia. There is a coffee roaster in Sydney called Triple Pick. Very small hole in the wall. They roast their own coffee right in the store. Absolutely one of my favorite coffees. And St. Ali in Melbourne, Australia. Two of my favorite coffee roasters that I always get to bring back a couple of kilos every time I'm there.
I'm going to have to get to New York because I know that OIC is not sending me around the globe to Australia. However, this is a shameless plug for the OIC, the Option Industry Conference next year, which will be in Puerto Rico, and hoping to try some new coffee next spring when we are in Puerto Rico. We appreciate you all following the podcast. Can't thank Tony and Marc enough for sharing their insights and wisdom. Really, thank you both. The OIC and CWC always encourage our listeners to send in ideas they want to hear on future podcasts. You can email options@theocc.com. Again, that's options@theocc.com, or call the great folks at Investor Services at 888-OPTIONS. As we always mention at the end of the OIC CWC podcast, similar to the extra topping on the Grande Macchiato, the acronym COFFEE. C, consider using. O, option strategies. F, for your clients. F, find various. E, educational resources. E, easily at optionseducation.org. Thank you again.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.